This is the luxury world. Get inspired with us today and tomorrow. The luxury watch market witnessed a dramatic turning point when the Rolex Daytona, once the crown jewel of speculative fervor, experienced one of the most rapid and severe corrections in modern collecting history. By January 2023, the price of the stainless steel Daytona had plunged from nearly $54,000 to approximately $27,000, cut in half in less than a year. The decline was not limited to numbers on a price chart. It revealed fundamental truths about hype-driven markets, unregulated dealer behavior, and the emotional volatility of speculative buyers. In this video brought to you by the Luxury World, we will be exploring the reality behind the Rolex Daytona and its current status in the market. Make sure to subscribe to Luxury World for exclusive access to upcoming insights, curated content, and expert guidance to help elevate every step of your watch investment journey. Understanding how the Daytona reached such inflated levels requires an examination of the perfect storm that preceded the crash. Although the model has always held a certain prestige within the Rolex catalog, the conditions of 2020 through 2022 transformed it from a desirable timepiece into a financial bubble. Global lockdowns, widespread economic stimulus, and the suspension of luxury travel and experiences led to a surge in alternative spending. Capital once allocated to services and experiences was redirected toward tangible goods, including watches. In this environment, Rolex's long-standing strategy of controlled scarcity became a powerful accelerant. The brand has historically released fewer watches than market demand supports. This intentional undersupply built an aura of exclusivity and privilege, with stainless steel professional models like the Daytona seen as unattainable trophies. Empty display cases, vague promises of waiting lists, and the implication that allocation depended on relationships only heightened the mystique. At the same time, digital platforms played an increasingly influential role in reshaping consumer perception. Instagram, Reddit, and YouTube elevated watch collecting from an enthusiast-driven activity into a status-oriented social trend. Timepieces were highlighted not only as symbols of taste and accomplishment, but also as lucrative investments. The Daytona emerged as the centerpiece of this movement. Its motorsport heritage, polished design, and perceived rarity turned it into a symbol of modern horological prestige, and increasingly, a speculative asset. Speculators driven by windfalls in cryptocurrency and equities flooded the market, eager to convert digital wealth into physical assets. Fueled by the fear of missing out and the belief that prices could only rise, buyers rushed to pay ever higher premiums. Market psychology has shifted dramatically. The Daytona was no longer viewed as a high-end purchase to be worn and appreciated, but as a financial instrument expected to yield short-term returns. By early 2022, the white dial steel Daytona, retailing for just over $15,000, was commanding secondary prices of $50,000 or more. Rolex's overall share of the secondary market surged, climbing from 33% to nearly 44%. Largely driven by Daytona transactions. At that point, the model had come to define the entire category of luxury steel sports watches. Demand became so speculative that buyers no longer questioned the logic of pricing. The watch was being acquired not for enjoyment or craftsmanship, but in hopes that someone else would soon pay more, a hallmark of bubble economics. This period bore striking similarities to historical episodes of speculative mania, including the Dutch tulip craze of the 1600s. Scarcity was no longer about supply constraints, but a manufactured narrative that drove frenzied purchasing. Online communities promoted the idea that missing a chance to buy today would result in permanent exclusion tomorrow. This belief system, reinforced daily by social proof and rapidly rising prices, created a feedback loop in which perceived value dictated actual behavior. Inevitably, external forces intervened. In mid-2022, the U.S. Federal Reserve and other central banks began aggressively raising interest rates in response to rising inflation. The era of ultra-low borrowing costs and speculative liquidity came to an abrupt end. Simultaneously, the cryptocurrency market collapsed, eliminating hundreds of billions in investor wealth. Much of this lost capital had been parked in watches, particularly high-demand models like the Daytona. As liquidity evaporated, sellers flooded the market. The speculators who once paid massive premiums for steel sports models quickly vanished, replaced by distressed sellers desperate to offload rapidly depreciating assets. Among them were flippers, over-leveraged gray dealers, and individual collectors who had entered at the peak. The time required to sell a Rolex increased substantially, and resale prices dropped faster than many anticipated. The consequences were severe. Dealers who had taken out business loans to stock Daytona inventory at inflated prices found themselves in crisis. Inventory purchased at $45,000 to $50,000 was now valued below $30,000. In many cases, businesses had to liquidate at a loss simply to meet debt obligations. Without the rising prices that once covered poor financial planning, bankruptcy followed. The gray market, which had previously flourished on slim supply and massive premiums, contracted sharply. The personal toll extended beyond businesses. Some collectors who had finally secured a Daytona after years of dreaming did so under pressure, often by extending credit or loans. The belief that this was the final chance to obtain a Grail watch prompted impulsive decisions. As the market deflated, those same collectors found themselves holding watches that now represented significant financial losses. A once cherished symbol of success became a lasting reminder of regret. Ironically, those who had diversified out of crypto into watches found no haven. The volatility of the Daytona matched the very digital assets it was meant to hedge. The convergence of two collapsing markets left many investors exposed on both fronts. The perception of the Daytona as a reliable store of value was fundamentally altered. By 2025, the Daytona has re-entered a phase of market stability. The white dial model now trades around $37,000, a level significantly lower than its speculative peak, but still representing a premium over retail. The frenzied optimism has been replaced by caution. Buyers have become more discerning, prioritizing intrinsic value and long-term enjoyment over short-term gain. Rolex, recognizing the unsustainable nature of this volatility, implemented strategic measures to reassert control over its brand and pricing environment. One of the most impactful responses was the expansion of the Certified Pre-Owned CPO program. This initiative allows authorized dealers to resell authenticated second-hand Rolex timepieces under brand oversight. The program has begun to formalize the previously unregulated secondary market, providing customers with greater confidence and Rolex with increased revenue capture. By reclaiming pricing authority and resale legitimacy, the CPO framework helps dampen speculation while offering a structured resale path. It also reinforces the brand's long-standing values of quality, heritage, and exclusivity, ideals that had been overshadowed by the pursuit of profit. The Daytona collapse provides lasting insights into the dynamics of luxury markets and speculative behavior. Even a brand as powerful as Rolex is not immune to the forces of overconfidence, loose monetary policy, and viral hype. When prices rise far beyond fundamentals, a reckoning is inevitable. The assumption that luxury watches are immune to correction has been soundly disproved. The most enduring lesson may be the realization that luxury items, while possessing long-term value, are not guaranteed financial assets. Illiquidity, psychological pressure, and macroeconomic conditions all play a role in determining resale outcomes. Scarcity, when overly manipulated, can fuel unsustainable growth. And unchecked enthusiasm, fueled by status anxiety and digital validation, can drive markets to dangerous extremes. Today, the Rolex Daytona remains a desirable and iconic model. However, the meaning of ownership has shifted. The focus has returned to appreciation of craftsmanship, brand heritage, and the emotional value of the timepiece itself. Speculation has lost its grip, and rationality has reclaimed its place in the luxury market. The story of the Daytona bubble now stands as a cautionary chapter reminder of how quickly a dream can become a liability when financial exuberance replaces thoughtful collecting. It is a case study in how scarcity, when amplified by unchecked speculation, can lead even the most prestigious brands into turbulent waters. Yet through measured response and strategic recalibration, the path forward remains one of resilience, not ruin. What are your thoughts on the topic we shared in this video? We would love to hear your perspective. Feel free to share your thoughts in the comments and give the video a thumbs up if you found it insightful. Do not forget to follow Luxury World for more curated content on fine timepieces and market insights. Thank you for watching, and we look forward to welcoming you again in our next video.